In today's short video, we're going to do a review of DSCR, debt service coverage ratio loans, for investors purchasing rental properties in the Atlanta area. Any investors that have questions, of course, visit us at dscrloansource.com or call the number here. First, we're going to just do a quick review of the benefits of DSCR. Again, DSCR means a debt service coverage ratio loan. This is a program that has become increasingly popular in recent years with investors that are purchasing both long-term and short-term rental properties. The main draw with DSCR loans is that these loans do not require any income documentation in order to qualify. That, of course, is a big hurdle for many investors, especially self-employed investors that try to get a regular conventional bank loan. Uh, they often have to qualify based on, of course, their income documentation with their debt to income ratios, and they have to fit into a certain box in order to be approved. So the DSCR loan, again, eliminates all the needs for tax returns, pay stubs, W-2s, or any employment verification as well. Instead, the investor will qualify based on really their credit and the cash flow of the property. Those are really the main two components that lenders look for when it comes to DSCR loans. DSCR also has other benefits in that investors can close their rental properties in the name of their LLC or corp, and this is often something that's not permitted with conventional loans. Obviously, there's advantages, tax and legal advantages for doing so, and many investors prefer to, of course, close in their LLC. DSCR also permits an unlimited number of properties that you have financed. Again, with conventional or standard bank loans, oftentimes this is limited to maybe only 10 properties. DSCR is a great program maybe for investors that have a short-term hard money loan, that they maybe purchased a property initially with a short-term hard money loan and they need to refinance into a more long-term solution. DSCR is a great option for that, and it also allows for investors to cash out without the 12-month seasoning requirement that is often in place with, again, regular conventional loans. Those loans need to be seasoned oftentimes for a year before you can refinance and cash out equity. Again, good for investors that may have done a short-term fix and flip type deal, and they need to refinance. First-time investors are welcome to apply with the program, and it applies to all your single-family homes, really most condominiums and multifamily homes that are eligible, short-term rentals, your Airbnb and so forth. That is also, of course, permitted with the program. Again, it's the debt service ratio calculation that is the main component when qualifying for this loan. Basically, it's simple division. The DSCR is calculated by dividing the net operating income by the total debt payment or debt service payment, mortgage payment. Lenders typically like to see a DSCR above 1, and anything really above 1.25 is considered good. We do have negative cash flow DSCR options available. Those will, though, require a greater down payment. In most cases for DSCR purchase loans, the down payment requirements start at 20% down. This can change, especially now that we're in a changing market. Things are changing pretty quick, really, on all aspects of mortgage lending. So it's a good idea to always just refer back to the website to get the latest and most up-to-date requirements as far as loan-to-value limits. But again, calculating the DSCR, just simple division. When you use your debt service payment, that should only include, again, principal, interest, taxes, insurance, and any homeowners association fees if they're applicable for the property. Not included in this is going to be your property management fees and utility fees and things like that. So again, simple calculation here. We'll look at some examples next. Again, some examples here. Let's say a real estate investor, they're going to buy a rental property in Marietta with a monthly mortgage rental income of 2,500 a month. They're going to rent it for 2,500 a month, and their debt loan payment is going to be 2,000 a month. So again, simple division comes out to a DSCR of 1.25, meaning the rental property generates 0.25 percent more income than what's required to repay the loan. That's good. Obviously, lenders like to see the higher the DSCR, of course, the higher that number is, the less risk to the lender, and that equals better terms and lower rates for you, the investor. So again, it's all based on risk, and again, there are options, one-to-one DSCR, and even negative cash flow options, of course. There are some restrictions with the program that investors want to be aware of. Of course, this is only geared towards investors in rental properties. Primary homes and second homes are not permitted. Non-warrantable condominiums, depending on the investor, sometimes those can be really more on a case-by-case basis. Early payoff penalties or prepayment penalties. DSCR loans, they all pretty much have this, and generally the prepayment penalty will be for a 5-year period. However, there are often options for investors to buy down and lower the prepayment penalty from 5 years to maybe 3 years. The interest rates are higher with DSCR loans when compared to an investor conventional mortgage. Typically, maybe 1.5 to 2 percentage points higher when compared to a standard bank loan. DSCR kind of falls in the middle. It's the interest rates, they won't be as low as a conventional loan, but again, the other extreme would be like a hard money type loan. And those are well in the double digits now. So this is kind of an option that's more in the middle. But again, if you are an investor that may have issues documenting your income, which again is common, especially with self-employed investors, DSCR may be definitely worth a look. Investors will need to document cash reserves. That is always going to be required. The amount of reserves. This is again the amount of savings that you have left over after your down payment and your closing costs are satisfied. Generally, reserves, they would want to see at least a few months, 3, maybe up to 6 months of reserve payments, and gifts are allowed for reserves. That's a basic rundown. Again, any investors in the Metro Atlanta area that have questions can reach out to us 7 days a week by calling 888-502-1825 or just visit us at dscrloansource.com. Thank you.